Hi, everybody. This is Beth Nordowny from the Nordowny team here in Rochester, Minnesota. And we just want to thank you for joining us here for our first webinar of 2016 Market Prediction. It was free palm readings and home evaluations as we look back at what happened in 2015 and take a peek into the future of 2016. We're going to answer questions such as, is it time to sell or is it time to buy? How are interest rates? What are the predictions? And we also want to answer any questions that you have to bring our years of experience and knowledge to you. So again, we are available for free home evaluations. I thought I would come up with something clever about palm reading, but in my brief research, I decided to stick with housing predictions. I even found one site dedicated to picking up girls based on reading their palms. Really, I found it to be super general in the palm readings. It was kind of fun that I think anyone would have tragedy, things in their life that would go on that if I even told you any of the stuff I came up with, it would just seem kind of hokey. So again, we're going to stick with what we're here to talk about, the three things today. Number one is what happened in the market last year. The second thing, what's our prediction for 2016? And also take a look at interest rate predictions and obviously save time to answer any questions that you may have. So let's start with, in order to start answering the questions about what's going to happen, we got to take a look back at what happened in the year 2015. So in the year 2015, we had a great year. We had over 2,480 homes sold last year. That's compared with 1,995 homes that sold in 2014. That's a 24.3% increase. And that's amazing to think about. We sold even a quarter more homes in 2015 than we did in the last year. So why is that? What happened in 2015? I think there's just more people entering into the marketplace, more buyers, through jobs that are created here by Mayo Clinic and all of us who support everyone who works at Mayo. The businesses are coming to town. The other thing would be the millennials who have, just been saving money, whether a lot of times they come out of school with a lot of student loan debt, but just finally being able to enter into the marketplace, and also just some pent-up demand, people that were unable to buy or sell because of the recession, and now they are entering into the marketplace. So for the first time, we saw some appreciation in the past. We actually saw some really good appreciation in 2015 for the first time in over 6 years. I think okay. Just checking, make sure everything's okay. So that was really great. I'm going to show you some, again, for appreciation on average in Rochester in 2015, we saw about 6% appreciation, 5.96. And that's, pretty impressive when you think about where we've been and then also where we're going. And also just some things that we talked about, the number of sold, the number of pending listings last year were great. So all in all, we're coming out of just a fantabulous year in 2015. So the next thing would be is then what would be the prediction for 2016? So I want to share some slides with you, and we're going to just touch base on where we're kind of at currently in January, and then where we're going to go in the next year. So here I'm going to share some slides with you. All right. So here we're sharing the first slide with you, and what I want to show is this is the months of inventory by price range. We wanted to break it up in two different prices. This first one here is showing everything from 100,000 to 300,000. And again, this is as of kind of September. So we're looking at the last quarter into the beginning of this year. So if we look at where we're at in September, again, if you want more explanation, you can see on the bottom that the blue line is the 100 to 150. The green line is 150 to 200. The yellow is 200 to 250. And then the orange is 250 to 300. So in September, this is talking about how many months of inventory that we have. So just to put this in perspective and a little bit of education is that it means that if nobody else placed their home on the market and we have the current demand, how many months it would take before we would have no homes left to buy. And just another benchmark just to think about is 6 months of inventory is a healthy market. 6 months is a stable market. It is neither a seller's market or a buyer's market. It would be exactly right where we should be. So if we look at September, for example, we were at a depending, either a 0.8 to 2.6 months of inventory is all. And then let's look at where we're at now in January. And in January, you can see between 100 and 300, we are at less than a month to only 1 month of inventory. It's a little concerning, the fact that if nobody else put their home on the market, we would be sold out of all houses in Rochester between 100 and 300 in 1 month's time. And remember also that market, that benchmark being 6%. The second slide here, we're going to get there the opposite way. Now this is the months of inventory again, and this is going to be between 100 and 500. I just want to add the $500,000 range just because you can see that it does shift a little bit. Our strongest market is between that 100 and 300, and even nationally between 200 and 300 is the sweet spot for all home sales. But you can see when we add that extra 3 to 5, it does bump it up a little bit, where we do it in that 4 to 5 and 4 to 450 range and 350 to 400. We are at about a 2.7 to 4.5 month of inventory. Again, so remember that as a seller's market, as when we get at that 6 month as a healthy, stable market. Again, just this is kind of another fun chart. If you're thinking about selling, this is the average days on market in 2015. And when we look back in February, on average between 150,000 and 200,000, it took about 60, 65 days for our house to sell in last spring when we started the kind of the spring crazy season. We look what happened throughout the summer, and then now where we were as of December, we were at 31 average days on market. I mean, that's just, again, due to the low amount of inventory. But as you can see, houses are flying off the shelves as they come in. The next one, again, just to look at, this is kind of showing the same thing. I'm going to show it 2 other times, is the housing supply. Again, in 2015 compared to the year prior, you can see that it was kind of concerning at the beginning of the year, then it caught up a little bit. But again, as from July all the way through the end of the year compared to the year before, we're down about, anywhere from 2 to 4%. And like I said, even here, more than that in the number of homes that are available for buyers to buy. This is, again, just to look at Rochester specifically. It's kind of a fun, we're going to spend probably about a minute on it. But again, you could just spend 30 minutes on this. But the biggest thing, if you look over to the far right again, if I point over here, we can see that between 0 and 400,000, we are in that 0 to almost just under 3 months of inventory. Which, if we look down here, that definitely is favoring sellers. And even if we go above it, it is favoring sellers all the way, except for the 650 to 699 is still a buyer's market. So there's one little pocket in there where you can probably still get a steal of a deal. So as far as that's kind of just like where we're at currently with the market, I want to talk about now, like looking at as an investment, and if you're thinking about buying a home in the next year or selling, where we're going and where we're heading. And I would assume if you're selling your home, you're thinking about doing a move up or maybe a downsize or looking at another possibility. So I just want to take some time and look at in 2015. I love this slide. This is a really fun thing to look at as far as an investment. Is it a good time to buy a home? If you look at the 2015 and where we were at, if we look at where you got a return on your investment, whether you invested in precious metals or stocks, the NASDAQ, you can see that real estate was outperformed all other types of investments. We were at a 6.8% return on your house. And like I said, even here in Rochester, just even an average, we we're at 6%. So again, some people saw more or less, but on average, we're at 6. So that is why it is a good investment to invest in a home. If we look at the future next year, trying to predict the future of home prices in 2016, one of the things I like to use is there's a home expectation survey. This is a nationwide panel of over 100 economists, real estate experts, and investment and market strategists is where these stats are coming from. So if we look at what home prices are going to do going forward, the next one we can see that the average annual appreciation. So some people say to me, I think we're in another bubble, or I'm afraid it's going to burst, or we don't know where things are going. But if we look at the average annual appreciation pre kind of the housing bubble was at 3.6 is kind of a healthy appreciation that it would be like the norm. And then during the bubble from January 2000 to May of 2007, we saw a 6.9% appreciation each year. And then when we look at during the recession, on average, houses were losing about 5% each year. So sometimes in certain parts of the country, they saw as much as like a 27 to 50% loss. Here in Rochester, we probably saw about a 20%. So it was a little less than 5% appreciation a year or depreciation a year. But if we look at January of 2012, it's too loud. It's okay. In January of 2012 to September 2015, we are at about 4%. Now, like I said, last year in Rochester, on average, we're at 6%, but that would be kind of along with that bubble type appreciation. But if we look at the different types, I am going to skip ahead one slide here. These are the different analysts. So there are people who are very optimistic about the market, and then this is a cumulative house appreciation. So this would be if we take each year, so from 2015 to 2020, what is going to happen with the houses over that 5-year period. And the people who think that the market are strong and can continue to be strong, those bulls out there are projecting 30.4%. If we look at the bears, the pessimists, the ones who think that maybe there's a housing bubble coming or maybe things are going to crash out, they're still even at 13.8%. But if you take an average of all projections, we're still at 21.6% over the next 5 years. And again, I think here in Rochester with the DMC, the money that the state is investing, the growth that we're going to see, I can't see another housing bubble coming. I just think it's going to be steady appreciation. Again, if we look at this projected mean appreciation, if you look at economists, what they're predicting is in 2015 and still in 2016, we're geared up to have probably our best years in real estate from even over the last 30 years. And then after 16, because again, remember, like I talked about, there was some pent up demand where there's some people that weren't able to buy or couldn't sell their home, or now they're able to have their down payment to enter into the marketplace. That is what should cycle out, and that takes about 3 years. And after about 3 years, we should be back to just a normal, stabilized market and economy. Now, again, we may see appreciation higher than this being in Rochester with the DMC, etc. But otherwise, in 17, most economists believe it'll kind of go back to just a healthy economy and appreciation of about 3 to 4% every year. So what does that mean? I mean, what does that mean as far as buying a home or to you as a homeowner? So if you were to buy a home or upgrade, again, I love this chart. It's really awesome. This one's kind of geared more towards a first-time buyer. But if you look at, if you bought a home in January this year for $250,000, and we just take that average home equity, that potential growth that we talked about, not the 6% even, just a standard 3 to 4%, 3.5%. And in 5 years, your home would be worth $292,075. And what does that mean to you or to your family? Is an additional $42,000 in potential family wealth over the next 5 years, based solely on home equity, without doing any improvements or anything, just living in the home. And I think that's pretty impressive. Like we talked about, going back to getting that return on investment. Real estate, again, and for years to come here in Rochester, is probably going to be a solid investment. We see investors coming in, buying properties all over the world. I think they're seeing the value specifically in our market with what we kind of have lined up here. This is just another graph to show, as far as if you're thinking about selling, kind of that pent-up seller's demand, where this is showing that pre the recession, on average, people stayed in their homes 6 years. And then as recession hit, this is where we're seeing where people were in their homes 7, 8, 9, even 10 years. And last year in 15, for the first time, we see it go back to 9. We believe that this will go back down to that 6 number, about 6 to 8 years. Once people have more, faith in the economy, know that they have equity, they can sell it, move to that next home. And we're just, here to show that now is the time to sell. If we look here, again, this is a percentage of homes with positive equity. I just like this, where it talks about in Minnesota here, you can see that 94.4% of the people, so 9 out of 10 people living in their homes, are now at a point where they have positive equity. I don't know if this message is out there. I think in Rochester, people are starting to see that they can sell their home when maybe possibly they weren't able to, and have equity in a down payment to put down on the next home, or again, have that money to put towards downsizing. And I think Rochester even itself is really actually higher than even 94%. This is, you know, it's a statewide stat. So next, if we look at, let's see, we've got 5 more minutes to wrap up here. The last part I want to talk about is, you know, what are interest rate projections for the year? And then this is a great chart. This is looking at all 4 quarters of 16. These are all the big sources. Fannie Mae is one of the, you know, lending institutions, Freddie Mac, and the MBA and NARS, National Association of Realtors, and the other one's a banking association. If you look at the average of all 4 in the first quarter here, it looks like interest rates are going to tick up to about 4.1, and by the end of the year, they're predicting 4.63, or almost, it's almost like 1% or 0.5%. So if you really want to get the best value for your dollar, it would be to sell or buy here in that first or second quarter to get the most benefit. As you can see that if you do general predictions, are just kind of play out what that 0.5% to 1% would mean in a payment or your purchasing power. Again, we'd love to show that to you. As you can see, it's a lot of savings here to do something early on. Fannie Mae is the only one that believes that the interest rates will stay the same throughout the year and a slight uptick at the end of the year. But as you can see, all of their sources are pointing to the rise of interest rates. This is where the interest rates were in 2015. You can see it was kind of volatile, going up and down throughout the year. But where they're going in 16, again, according to Freddie Mac, is, you know, they're even looking at 4.1 to 4.7 by the end of the year. So we're going to be back to 5%. In some markets, it's interestingly enough, nationwide, this would price somebody right out of the home market. Luckily here in Rochester, you know, you still are going to be able to buy. It's just your buying power is not going to be as strong, and you're not going to get as much for your dollar. So if we look again at how is it going to affect the impact of jumping rates from 4 to 4.5, you know, 70% of people still believe, when surveyed by Zillow, that they'll continue with their home buying plans, that it's not going to affect them. Where 45%, you know, they're still going to buy, but they may consider a smaller home or a less expensive community. So I still think people are going to be out there buying and selling. But again, if you're just going after the investment, what's best for your pocketbook, what's going to give you the most return, like I said, definitely doing it in that first part of the year would be more beneficial. And then last, I just wanted to talk a little bit about Remax and our team before we get to some questions. I'm really proud here of what our statistics are. This is just a market share total, and I just want to educate the public too that if we looked at the close of 2015 and our market share totals, Remax results came in at 34.1%. Means 1 out of every 3 people buy or sell their homes, and you can see the green is selling and the yellow is buying. That they are all, you know, using Remax. Those are all the other offices: Edina, Burnett, Keller Williams, Counselor. You can see the list and how much it drops off there. Again, it's important when making this big decision in this investment, just with what we basically, just basic information that we touched on today, that you have somebody that can sit down and consult with you in making this plan so that you can get the highest return on your dollar, make sure that you're safe from any market fluctuations, and just have that experience and knowledge. So that, I think, again, I just want to also talk about the Nordowney team, and this year we were able to help 179 people buy or sell a home here in the Rochester area. Our goal in 2016 is to help 250 people buy or sell a home, and we'd love to have you be one of them. We take a lot of pride and interest in making sure that we know the market, we know the statistics, we're educated, and just want to, you know, pass that on to you so that you're making the best decision and a well-informed, educated decision, rather than maybe the HGTV experience where we just open doors and smile. So I will take this time to see, we are at 20 after, if we have any questions. Let's look here. Looks like there isn't any questions to answer at this time. I'll give it another 30 seconds here to see if anyone has anything. Oh, this is a great question. Noelle, who's here with me, we're going to talk about when the next webinar is. So we have 2 things. We have a live event coming up, and then we also have a webinar coming up. So our live event is, February 2nd. It's going to be at the People's Co-op in their community room, and it's going to be at 6:30. We will post it on our website and on Facebook, so definitely we want you to be aware of that. Our first event is, again, just really concentrating on buying a home in 2016 and how to win in this competitive market where a lot of the times we're entering into multiple offers. So I think it's a really great resource. It's not just a basic overlay. It really is talking about specifically what's happening here in 2016. And then our next webinar is going to be in, is that March then? In March, and we will also go ahead and get that as well. So we do have one posted for you, so you can attend the next one. So we do have one question here, and there is a question that says, what if I'm currently renting? So if you're currently renting, this, again, it depends on specifically if you are in a lease, if your lease is going to be up in the spring or the summer, or even if it's right around the corner. This is something, again, we can sit down and make a plan with you. On average, it depends on the market. Like I said, it is more competitive. Some people are going out and finding that home right away. We are having houses that are off market that we're able to show, but it is taking 45 days to show, to close a home now instead from the time of contract to closing. So what a lot of people, when they call in and they say they're renting, but their lease is up in March, April, May, they're thinking, when do I start this process? And when we sit down and even have a conversation and talk about what it's going to take to get pre-approved, to go find the house, and then to close, really a lot of people are needing to look now. And it's surprising to them because they think they've got more time, but really it's the months of February and doing something by the beginning or end of March in order to line up with that rent date. But again, that's an excellent question. And if you're thinking about, renting and you want that statistics of like, what does that mean for me? We would love to sit down and talk to you, and even do like a webinar or web chat like this and just have an online meeting. And again, we have like one other question here. It's asking if you can watch this show later on, or if you couldn't watch it live and you want to share it with somebody. Yes, absolutely, you're able to do that. We are going to have it posted on our Facebook page, on our website, on our blog. It'll be on YouTube, and it also is on the Google Plus, on the Hangout as well. So that is another great question. And I think that, we have one more. Okay, so someone asked too, what does our team do different? My house was listed with someone else and it didn't sell. That's another excellent question. One of the things, we have a lot of things our house does differently, our team does differently when selling a home. One of them is like, just the technology, even doing something like this today, and how to reach people through online media, social media, and then also still using the traditional methods of open houses, print advertising. Again, one of the things that's a benefit I love when you have a team is just having that collaborative effort of multiple people selling your home, multiple, backgrounds and levels of experience and expertise. You may have an inside person who's getting back to somebody within less than 2 minutes on every single time. And again, we also do a lot of preparing the home for sale, whether it's through staging, just getting the house ready, showcasing it in its best light. So sometimes, like I said, if people have had a poor experience in the past, number one, it could have been the market, it could have been the marketing, it could be pricing, it could be just how your home is showcased to the public. So that's something that, again, it's no obligation. We'd love to come out and sit down with you and just chat about a plan, or just kind of try to dissect what happened last time and just listen and see what experience that you had and then what we can add to the table. And then again, another question is it a good time for investors to buy? Is the rental market strong in Rochester? So yes, again, actually just yesterday I was meeting with a commercial lender in town. They were talking about the number. It's amazing to me because when I look around Rochester and I see how many buildings are built, these big multifamily units, I think like, who is going to live in all these? But what I found out yesterday is it's amazing how many of them are almost at capacity. They are on waiting lists, some of them in certain locations. And they were sharing with me that even one of them, the average rent on it starts at $3,000 a month. And like what we're finding in a lot of the rental apartment buildings is they're starting at $1,500, $1,600. So again, you're usually able to buy a home cheaper than rent. Now, as far as investment, now to answer the question, so is it a good time? There are a lot of people who come here for a year or two for training, etc., that are looking at wanting to have a family and they have animals and pets, and it's difficult for them to find that multifamily tenant type living that fits their family needs. So they would obviously love to rent a single family home, and there definitely is a shortage. And my point, to bring it full circle even back to the commercial lenders, he said that we're still not even saturated. According to the market statistics, we should be able to have about 3,000 more units for even the multifamily, but he said they're definitely hurting in the single family area. So as far as, again, if you're looking at what I just had talked about earlier, as far as what the return is, and if we're at like a 6% return or higher, and you look at what precious metals, stocks market, all that is doing, to really diversify your account, it's a great time to add real estate to that portfolio. And again, the rents are, as you can see, I've just kind of alluded to, the rents are high. You can get a return. Even a lot of times people are cash flowing these investment properties, not having any problem renting out. So again, I think that we are close to our 30 minutes. I don't see any other questions coming in. I just want to thank all of you for taking the time, either if you're watching it live today with us over your lunch hour or even at a later point. And again, this is a new thing for us. We just want to share this information and educate you. If you feel that there's a time that would be better, again, we thought a lunch hour meeting would be great while you're on your noon hour. And again, just that you have the opportunity to watch it on the weekend or evening in your home. But if there's a time that you feel would be a better fit, let us know. If there's any topics that you'd like to see us present on or ask questions and anything that's on your mind, we'd love to hear from you as well. And then also, if you want to take advantage and just be part of, like I said, one of the best years probably in real estate that will have happened in the last 30 years, as far as getting in and getting that good market appreciation or selling, doing that upgrade, taking time to just really think about, again, you may be an empty nester where the kids are grown, you've been living in a 4-bedroom, 3-bath house, just the two of you, and you're thinking you're tired of maintaining the house and the yard and the lawn and all that, and just kind of look at it doing something smaller. We'd love to sit down and come up with a personalized, customized plan that just really fits your needs and what you're looking for. So again, I want to thank all of you, and we look forward to hoping to have you be one of our 250 people this year that we help buy or sell a home. Thank you. Bye-bye.